Hello, everyone, and welcome to another episode of Selling Greenville, your favorite real estate podcast here in Greenville, South Carolina. I'm your host, Stan McCune, realtor right here in the Greenville area of South Carolina. And you can find all of my contact information in the show notes. If you need to reach out to me for any of your real estate needs, go ahead, send me a text, I've had some people send me DMs recently on like Facebook. If you're not friends with me on there, just FYI, those get filtered into a different folder, so I might not see that. So just be aware. It's best to text or to call or to email. And even sometimes I've had people email me and that's gone into my spam. So I'm just going to tell you guys my phone number is in there. You can text me at any time for any of your real estate needs. So please go ahead and do that. And just a reminder, as always, please like this show. This episode, this show, please subscribe to the show as a whole, whether you're using YouTube or whether you're using Apple or Stitcher or Spotify or any of those. Please subscribe so you don't miss future episodes. And if you guys could leave a 5-star rating on Apple Podcast or Spotify, please, if you could even leave a review, those things would be great. I would really appreciate it. And I just appreciate, even if you don't do that, I still appreciate that you guys listen. So thank you for doing that. But if you want to take your appreciation of this show to a whole new level, please do those things if you haven't already. Today, I want to do a beginning of summer update because here we are, the end of May, entering into June. I think, for most people, Memorial Day is kind of the unofficial start to the summer. It is that way for me. Now, Memorial Day weekend in Greenville this year was like really weird. I was actually out of town for a little bit. I came back and it was like raining and like in the 50s. And I don't ever remember it being like that in the end of May. Normally we are like full-blown summer mode here in Greenville at that time of year. But nonetheless, it's been unseasonably mild, and that is just kind of interesting just how that's happened. I don't know why it's happened. We've had all sorts of rain. I had hail. I was out of town. I had my glass break sensor go off with my alarm system because it thought someone was breaking in because I was getting hail on my house. I haven't yet had a chance to check to see if I have hail damage. Some of you might know I used to be an insurance adjuster, so I'm actually qualified to check my own roof for hail damage. I'm pretty good at it. But nonetheless, I haven't had a chance to do that because I'm still getting caught up. I spent 2 weeks out in California, and then sadly, my wife's uncle passed away right at the end of our trip. So then we had to make another trip to my wife's family. And so I was gone for almost 2.5 weeks, and it was crazy. But we had a really great trip, spent some time seeing some national parks out in California. It's the most time by far that I've spent in California, and my first time seeing any of those national parks. And let me just say, so we drove all the way from Vegas, eventually ending up in San Francisco. And I think I finally appreciate why California seems to be the most difficult state to poach people away from to come to Greenville. And I think I finally know why. Like, we get a lot of people from the Northeast who come to Greenville. We get a lot of people from Chicago area that come to Greenville. We get a lot of people from even from Florida, people that are getting outpriced that are moving to Greenville. Just anecdotally, just my experience in terms of clients that I've had. In Texas as well, that's another one. But not very many from California. And having spent, a couple of weeks out there, I can understand. I mean, that state is just beautiful. I know it's like the politics out there. I'm not even going to say what I hear from people, but the political situation out there and the price of things is just outrageous. But I can understand why people have a hard time leaving when there's just beauty everywhere. Obviously, the big cities, everyone wanted. Everyone has asked me what the homeless situation in San Francisco is like, and it was like, it's a big city. Like, there's homeless people. I spent a lot of time, 18 years of my life pretty close to New York City, and there's a lot of homeless people in New York City as well. Like, it's really no different, in my opinion, than San Fran. Granted, I didn't go to the areas where there are fentanyl issues going on, but you just know not to go to those areas. But nonetheless, I'm really getting off topic here. I can understand why people love California. It is a beautiful state if you avoid some of those rougher areas, and most of the state is not the rougher areas. Most of the state is just beautiful, rolling golden hills, just absolutely incredible. What blew my mind was a small little town, Three Rivers, California, which nobody's ever heard of, but it's right near Sequoia National Park, which sadly was closed, but that's okay. We still, oh, I don't know what my dog is freaking out about if you hear her barking, but we still got to enjoy that area, and just the city of Three Rivers, just this little mountain town. It was just gorgeous. Like, they had this lake that went in between the mountains, and it was just, just absolutely incredible. I got a picture of it. I think I posted it on my Instagram because I was just so blown away from it. So just amazed by it. It was just not what I was expecting. So you can look me up on Instagram. I think I'm going to be posting some more photos from that trip. I just haven't had time to. Just been too busy. But at Stan McCune on Instagram, if you want to follow me on there. I'm also at Stan McCune on Facebook. I'm also the only platform I'm not at Stan McCune is YouTube. But if you search my name or you search Selling Greenville, you can find this show on there. All right, so that's a little recap of what I've been doing if you were interested. But I want to talk about just a little personal update on what the real estate market is doing the beginning of the summer. We didn't do our normal market stats look this month, and that's because I had to record all of the episodes for the month of May, besides this one, prior to going on this trip. So I cranked out 4 episodes in the span of 2 days, so that you guys wouldn't miss anything while I was traveling. So we're just going to skip the market stats for what would have been the month of April, and then in a few weeks we'll get May's statistics. But I can still share with you kind of what I'm seeing, boots on the ground here in the Greenville area, and just kind of what the mood is in general, what I'm sensing. And here is what I'm sensing. Now, granted, this is kind of coinciding a bit with Memorial Day weekend, but from things that I've read and other people I've talked to, I don't think that it's strictly a holiday-related event. We are seeing things slowing down quite a bit, and that's no surprise because mortgage rates have crested above 7% for the third, or depending on how you track it, fourth time the past year. And this is the direct result of what I'm going to call the debt ceiling crisis. We're still, if you're listening to this, we may have already resolved this. We may have already pushed up the debt ceiling. I'm recording this prior to the vote having taken place on whether the debt ceiling is going to get extended, or whatever the proper terminology is for that. But as a result of that, that indirectly caused mortgage rates to crest above 7%. I've even had some people that have even backed away from pursuing real estate until the whole debt ceiling thing gets resolved. So multiple things have kind of come together here the past few weeks that have really caused a bit of a slowdown in terms of buyer activity. And I think we're seeing that across the board. Like I said, on a national level, I have seen people saying the exact same thing. And so the question now is this 7%, above 7% rate scenario that we're in right now with mortgage rates, is that here to stay? Or is it going to, once this whole debt ceiling situation gets resolved, and it looks like it will get resolved, well, at that point, we see it return back to below 7%, maybe in the high 6s, or maybe mid 6s. It seems like people really just got squeamish once it got above 7% and decided, you know what, we're just going to wait this out and just see what happens. Some people really don't think that we're going to see it go below 7%, that we might actually be in a above 7% rate world for the next several weeks, maybe the next several months. I'm a little bit non-committal, but I tend to think it will dip at least a little bit below 7%. And then we could very well end up seeing the Federal Reserve, though, increase rates again, at least their federal funds rate next month, or depending on when you're listening to this, in the month of June. A lot of people thought that they would pause. I even heard some people say that they thought that they would lower rates. That I can almost assure you is not going to happen. The best case scenario is that they pause rate hikes, at least from the standpoint of mortgage rates. That's the best case scenario. I guess you could argue whether that's the best case scenario for the economy. But right now, there's a lot of sentiment, a lot of people thinking that the Fed is going to increase rates yet again in the month of June, maybe a quarter percent rate hike, go up 25 basis points. And if that happens, it's hard to know whether that would impact mortgage rates, because a lot of these things have kind of already been priced in, and mortgage rates are already higher than you would expect them to be based on what the Fed has done. And so, long story short, we don't know. But I tend to think that mortgage rates will go back below 7%. And I tend to think that even if the Fed does increase their rate by 25 basis points, I tend to think that that won't have a dramatic impact on mortgage rates. But if they keep hiking, let's say we get a June hike and then we get a July hike, okay, now we might start to see that start to have an impact on mortgage rates. Almost certainly we would. But I do think for sure that we can be confident that mortgage rates are not coming down anytime soon. I'm less and less inclined to believe that we're going to see them go below 6% before the end of this year. I'm starting to think that we should just kind of expect them to be best case scenario in the mid sixes by the end of this year. And then in 2024, we'll see what happens at that point. Most likely, we'll see things fall down at that point. But for right now, we are seeing an extended period of time with rates in the sixes and potentially the sevens. And so the market is just going to have to account for that. And there's just going to be fewer buyers out there because more people are going to get priced out. And I will say this. I think this is the first time that I really think that we could see a slight drop in prices. We might start to see some slight year-on-year drops in prices. We didn't see that for the month of April. I will bring this up. I'm not going to go through the market stats line by line like I normally do, but the median sales price for the month of April was $302,500, which is 1.5% above April 2022, which was at $298,000. So we did see both a month-on-month and a year-on-year median sales price increase in the greater Greenville area per the Greater Greenville Association of Realtors for the month of April. But it would not shock me if we saw a decrease in May and or June. We'll have to see when the May stats come out. But it'll be very interesting to see. And I'll remind you guys that that doesn't, there's really no reason to panic for any of these things. I mean, I guess if you're a seller and you only have one property that you're planning to sell soon, like your own primary residence, and you don't have investment real estate, you might be freaking out a little bit. But listen, we're not going to see, at least there's no data to indicate anytime soon that we're going to see like prices drop by 10, 15, 20%. If they drop, it'll be, less than 5%, probably 1%, 2% year on year, something like that. That's the kind of thing that we could see if we see rates stay in this 7% range. I think it could damper buyer activity to the point that we see a little bit of a price decrease. But if you look historically at the charts in Greenville, it is not uncommon in a normal year for there to be a month where the year-on-year median sales price is lower than it was. It is negative, I should say. So where you have a negative year-on-year median price point growth, and that doesn't mean that the line isn't trending up. That doesn't mean that for the entire year that it's normal for prices to go down, but it's not uncommon for it to be kind of a jagged line where the median price point has some months where it's below the year before, but most months above what it was the year before, with the net of the entire year being an appreciating market. So it's actually been more of the anomaly that we haven't had any months like that in recent years, that we've had appreciation every single month, or at least median price point growth every single month going on. Oh, I don't know. I'd have to go back and look at the stats, but it's been going on for a while now. That is not the norm. So you should just be prepared for that. You will hear national media talking about prices going down because there's a lot of data on the national level about that happening. And what's happening on the national level is a lot different than what's happening on the local level here in Greenville. In Greenville, much more stable market. Our highs aren't as high as things are on the national level, and our lows aren't as low as what things are like on the national level. So just be prepared for that. You're going to see these headlines, but they don't necessarily pertain to Greenville. But I'm saying that we may have a few months here where we see some price growth, not just slowing down, which it already has, but actually going into the negatives. So we will just have to track that. Now, at some point, we're going to reach these months where we saw the extreme slowdown that happened last year when rates started going way up. So that happened in the summer of last year. So when that happens, some of these year-on-year numbers are going to start to look better, and that's merely because we're going to be comparing this year to the slow part of last year. So that's something to keep in mind as well. We're still comparing this year to when the market was still very, very crazy in 2022. Eventually, once we got into the late summer of 2022, the market had really, really slowed down. We were in a housing market recession already by that point of last year. And so once we start comparing those numbers, things will start to balance out a little bit. But up to this point, we have still seen every month that the data has come out, we have seen price growth. It's just been a lot less extreme, rather than 20%, seeing 1.5% year on year, something like that. And that's good. That's what our market in a lot of ways needs. Now it's not good for everyone. Again, if you're a seller and not a buyer in this market, then that's not great. You would rather have 20% year on year appreciation, right? But for the most part, the market needed it to slow down. The problem is that inventory has ticked up a bit, and I do want to discuss that. Let me pull up the market stats here again. Where did I put them? Here we go. And you're not seeing, if you're on YouTube, I'm not going to screen share this time, just because I'm not really looking, super closely at these. But new listings were down almost 10% year on year. And let's see here. I said I wasn't going to go through all these, but I look at this data and I just want to talk about it. The percent of list price received jumped up to 98.7%. That was a little surprising. I think we might see that drop a little bit. But the inventory of homes was at its highest point that it's been since 2020. So the total inventory was at 3,601, which was 125% increase year on year. So that's a big number. Now that's still below the pre-pandemic norms. But I have seen recently that inventory levels are starting to increase just a little bit here in our market. And so again, this is all kind of confirming what I'm sensing, which is that buyer activity has slowed down a bit. And I really think that the 7% rate, I think that just caused a lot of people to say, you know what, I'm putting on the brakes. I'm suspending my activity for now. I'm just going to kind of wait this out and see exactly what happens. And, at some point, what the Fed is doing is going to cause more people to lose their jobs. A lot of people think that the Fed is trying to orchestrate a job loss recession. I am in that camp, that's what I believe the Fed is trying to do. We have other recession markers, but one of them that has not been a recession marker up to this point has been the number of jobless claims. And we just had a bunch of data. The reason why people think that the Fed might hike again in the month of June is that we just had a bunch of data that came out that showed that inflation and the economy and jobs and wage growth, all of these things are still going at a faster and more a hotter, that's a terminology that they like to use, going at a hotter pace. We're still seeing not enough jobless claims. We're still seeing wage growth going higher than we would expect it to. And normally, 99% of the time, people would be really happy about that. Oh, okay. The economy's strong. Not very many people are claiming that they're jobless. Wages are going up. People are hiring. All of these things would usually be positive, but we're in this bizarro world right now where, because inflation is still running hot, the Fed has targeted the jobless claims number. And apparently what someone that I trust has said that they believe, I believe it's that the Fed wants to have, I believe, the jobless claims number to be 323,000. I believe. I'd have to go back and look at that. But anyway, we're nowhere near that. So there's a lot of questions on whether the Fed feels like they've done enough and they just need to kind of wait it out and just kind of let what they've done up to this point run its course and take effect, because the effect tends to lag behind what they do. But a lot of people are just like, you know what? Based on what the Fed has been saying and based on all these numbers that have just come out, they're going to keep being aggressive and just going to keep raising rates. And my understanding is that the situation in Europe and parts of Asia is even kind of more extreme. That actually it's better in the U.S. From the standpoint of inflation and some of these other things than it is in some of these other countries. So we live in very strange times. But the long story short of it is things are slowing down. Now, for me personally, I still feel very busy. But I always feel very busy. Part of this is, I just got back from vacation, so I've just got so much, that I need to be doing. And even though I really prepared for it and I set up all my clients with people that potentially that could assist them if need be, or if I had someone reach out to me, I had processes in place whereby I could make sure that they could be helped in my absence. But I still, as with anyone, I still have a backlog of things to do coming back from vacation. But I'm just looking ahead at even, these next few months, listings I've got coming up, buyer clients I know that are going to be coming on the market. And I'm just like, you know what, for me personally, I'm going to continue to stay busy. And I'm grateful for that. But I need to make sure that stays true. And so that's where you guys come into play. And so I appreciate any referrals that I get from you guys. It really means the world to me. And a lot of you guys have been great advocates for me, for this show. And so I really appreciate that. I'm going to wrap the show up now. I just said about how I'm busy. And yeah, I need to get to some other things. But I hope you guys enjoyed the show. As I said, please, any of your real estate needs or your friends or your family members' real estate needs, please keep me in mind. My contact information is in the show notes. Please reach out to me for any of that. Please like, review, subscribe, all of those things, comment. By the way, YouTube, I need to figure out there, it's not notifying me of comments on there. But if I do periodically log in on to the YouTube account, and I will respond to comments on there if I see them. So please interact with this content as much as you can so that we can get it out to as many people as possible. I appreciate you guys listening, and we will talk again next time.